33%. I think let me actually start off with Capitec and
Yeah.
the latest news that has come out of Capitec before I get into the whole consolidation discount to net asset value with Capitec. I think it was on Wednesday. They announced a termination agreement between them and Sanlam, and it had to do with their funeral plan. So Capitec, one of the solutions that they've brought forth to the market, it's not only a banking solution, but it's also been an insurance solution.
So they're trying to be a one-stop shop for financial services products.
Exactly.
Yeah, that's a lot of banks do that.
Yeah.
I mean, I know ABSA Life, they've got a life insurance on that side.
Yes.
Even Standard Bank does have some insurance element into
Were they underwriting their own insurance products?
I think ABSA does have an insurance license.
Yes.
I don't know about the other banks. But I mean, even if you can see even the move from Discovery as well, right? It started as an insurance company, but they've got a banking license now. They've got a Discovery bank. So they want to be a one-stop shop for financial services products, right?
So it's quite interesting.
And it's not even just the banks and the insurance companies.
Yeah.
If you look at the retailers as well,
Yeah.
like ShopRite launched the money market bank of some sort, where you don't pay banking fees to actually transact on it. I swear, ShopRite didn't pay me to do.
Wait. So like when you... I was watching it. I was like, this is so sad. It's very, very sad. I think
Let's see.
I remember when you guys lost 7-0 to Liverpool last year.
And we are playing Liverpool next. Yeah. We just had to close with that one, We just say, man, don't cut this part one out, Don't cut this part out,
That's so
because
funny.
wow. Anyway,
go,
welcome to the final episode of the Investment Kennel podcast. I'm Depp today. I've got shades on today. It's indoors, but I do have shades on.
Wearing shades in the shade.
But yeah, what a year, man! What a year! Like it's been quite a crazy year. We started this podcast from a coffee shop, Like we just
shop in Sea Point,
in Sea Point. We just said, look, there's quite a need for this thing. Let's just share the 2 cents on investments that we have. And it's been amazing, man. Like, look, this has been partially therapy for me, and also
me too.
And also just doing what you love, man.
Me too. In fact, I think next year I'll also go into some of the opportunities that. In fact, we'll get into it next year.
Yeah.
As to some of the opportunities that this podcast has afforded us.
Yeah.
They've been tangible. But yeah, it's been one hell of a year, man.
But otherwise, are you well?
I'm good.
Ready for the holidays?
I am more than ready.
Yeah.
It's been
a long year,
It's been a long year. It's been a good year. Ebbs and flows. There's been great moments. There's been bad moments. But one thing that has been constant.
Yeah.
One is God is good. And number two, the Investment Kennel podcast has been therapy for me.
Yeah.
Just like how you alluded, has been therapy for you as well.
Yeah.
Yeah.
No, it's been good. Look, I can't wait to go back to Limpopo, man. I can't wait to have ththose mangoes and all the fruits and just, But the sun gets a little bit crazy. But look, because I was talking to one of my colleagues, and then I'm like, yo, Cape Town has become so hot lately. And then she's like, yeah, no, Cape Town has made you weak, because Limpopo gets hotter than this, and then this is what happens, So I'm like,
sorry about this.
Crazy stuff. But look, I'm not looking forward to the heat. It is what it is.
Oh man, it's one of those things. I'll be going up to Johannesburg. I'm gonna see my family, of which I'm really, really I'm keen. I'm keen to see them, and then we're gonna make our annual trip up to Bushbuckridge for a day and to the Kruger National Park.
Oh, wonderful.
Yeah, no, that place is it's like pilgrimage.
Okay.
We go there once a year, and I can't wait. I
All
want to
your
see.
brothers are gonna be there and everyone.
Sorry, I'm not sure about all of them.
Okay.
But yeah, I think my little brother's gonna be there with his wife as well.
Okay.
So it's gonna be nice. I'm keen to see some animals.
Yeah.
I'm keen to see some elephants and hopefully some cats, some big cats, some lions and
I've never
leopards. Yeah.
I've never been really lucky to see a lion in Kruger National
You've
Park.
never seen a lion in Kruger Park?
Yeah.
What do you mean?
I've only seen it when I was in Kenya. That's the only time that I saw
That is
a
a
lion.
scandal.
I'm telling you, like
That is
I only see
controversial.
all the other animals, but I've never been lucky with a lion.
Yo,
You know when you're driving and someone says, "Yeah, we saw them that side," and then you turn, you go around, you go there, they are not there. You know,
jeez. Okay,
like
wow. No,
I've
no,
never
no.
been, and I've gone there in the evening,
Yeah,
during the
in
day,
the morning.
afternoon, morning. Like I've done all the drives, man, and I'm just not. I'm
I'm
just not
sorry.
lucky.
I'm so sorry, my man. Like, no, I think you need to give it another go. Just
I've given up.
I mean, there's no ways we can leave it as you having to go up to Kenya to see a lion.
Man, I've given up.
But-
And you know, when I went to Kenya, I saw all the big fives,
Hmm?
just like that.
except for the all of them,
Yeah, just like that.
including the leopard.
No, except the leopard, obviously.
What do
I
you mean,
mean-
obviously? What's
I mean,
that?
it's hard to see a leopard, man.
Yeah, it is. But
Yeah,
like
it's very hard to
that's
see.
part of the big five.
Yeah,
You
but I
didn't see
mean,
the
like,
big we saw four.
I mean, like the four, man. Like you
Yeah.
know, because I mean, that's basically it. Because
Yeah.
the leopard is very rare.
It's so rare.
It's very rare.
My
you know?
goodness gracious! Like seeing a leopard, I think I have 4-5 years without seeing a leopard.
Hmm.
In fact, seeing a leopard, it kind of makes the Kruger National Park trip.
Hmm.
Although the lion is still the box office, it's
Hmm.
the showstopper.
Hmm.
But seeing a leopard is quite rare. I remember one year we saw two
Yeah, two leopards.
in two different sightings.
Wonderful. I think I've only seen it in a zoo.
Yeah. But like, yeah, no, mate. Let's get straight into it because, like, I think once you mention zoos, that's a whole new.
Yeah, and we're not
conversation.
gonna talk about sports because it's been a very disappointing weekend, eh?
Listen, like, okay, on the sports front, let's do this thing quickly. I watched a bit of United yesterday.
Yeah,
I don't support Manchester United, but it was sad seeing it like that, seeing the state of the club like that.
You know what's sad
Hmm.
is yesterday we were having a family picnic in our office.
Mm.
People brought in their kids, their husband, wives, etc.
Mm.
So I went there wearing a Man U shirt.
Yeah.
And then I think we finished around about 4 p.m.
Mm.
And then I went to the mall. I didn't want to watch the game.
Yeah.
And then I went to the mall around the time when the game was about to end or something.
Yeah.
And then everyone was just laughing at me. When I was walking around, everyone was just laughing at me. And then I met this one Man U fan.
Yeah.
And then he asked me, "Did you watch the game, man? Like, how did we win?"
Oh,
I'm like, I looked at him. I'm like, what were you expecting?
What
Like,
yeah, but it's
Look,
it's poor.
it's so disappointing, man.
Mm.
Like, it's so disappointing.
It's not even great. Like I don't even draw much enjoyment from it because I think, well, I support Arsenal, no? And I remember my first entry into watching football.
Mm.
It was during the time where it was United and Arsenal.
Yeah.
We were having a go at each other. Strong. It was Patrick Vieira versus Robbie Keane.
Yeah.
That type of vibe. And seeing where United is now is sad. It's like a part of my childhood has been taken away. But yeah, no, man, you guys are doing so badly, and yeah, it is what it is.
Right, it is what it is. Anyway, let's get into the portfolio check, man.
Let's
in
get
terms
straight
of
into
what's
it.
happening.
Let's
Are
get
we on
straight
the
into it.
green? Are we on the red
We are on the
overall?
green. We are.
Okay,
We're
fantastic.
We're definitely in the green.
What's the percentage? What's the
Overall percentage, I will let you know soon. But
Okay.
I've taken a screenshot,
Okay.
which kind of cuts out the
percentage?
the actual overall percentage. So I just
Okay.
went straight into it. Apologies for my voice. I'm recovering. I've been a bit ill. But yes, don't forget to like.
Yeah, don't forget to like, comment, and subscribe, guys. We've got some really good content coming up, and yeah, I'm sure next year it's gonna be great, eh?
Next year it's gonna be excellent. It's gonna be bigger and better. So, portfolio check, our last one for 2023. Yeah. So at number 1, 2, 3, 4, 5, 6. Number 6. British and American tobacco. We're gonna get into British and American tobacco. It's at negative 10.34%.
Yeah.
Yeah, British and American Tobacco. And then just in front of British and American Tobacco is Discovery.
Mm.
Discovery is continuing to disappoint
Mm.
with a negative 8.1%. That's Discovery.
Yeah.
And then number 4, we have Anglo Platinum, which has actually seen improvement as we mentioned in the last episode. So with Anglo, we at negative 1.34%.
We've touched so much on mining, eh?
We've touched a lot on mining, and
Like even just the different players as well in
We
terms of
have.
enablers, regulators,
we have
all those things. We've touched a lot in terms
we've
of who
touched a lot.
plays
I
into
feel like
the space.
people who have been following us, you all should be mining analysts right now. Sorry. Yeah, you all should be mining analysts now because jeepers creepers. You've been giving us a masterclass because this is duly your company and you've been on top of things. Yeah. And then number 3, we have no, not number 3. In fact, we had 7, not 6. So actually now number 4, we have the difference between the two. We have Sun International. Sun International, that has been my inclusion. And if you want to look into why I actually got into Sun International, it's episode 9.
Yeah, episode
Yeah, it
9.
was episode 9.
One before the last, yeah.
Yeah, the one before the last, and
Where you sold
Yeah.
which one did you sell again?
I sold Sassel.
You sold Sassel, yeah.
Yes,
And then you
I
bought
bought Sun International, and it was quite interesting. I saw the Reserve Bank. I follow them on LinkedIn.
Yeah.
They every week they bring out what they call a chart of the week. And 2 weeks ago, they charted the week where they were looking at numbers of basically tourism making a comeback.
Okay.
Which is quite interesting. So I even mentioned a comment that I hinged a
Yeah,
lot
I
of my
think-
analysis on it. Yeah.
I think it's one of the no more year post COVID
Yeah.
where we should see some really good improvement and
Yes.
flow in the tourism industry.
Yeah.
I mean, Cape Town already, the traffic is a mess, man.
It's already hectic.
Like just to go from, you see where the KPMG building is,
Yeah.
and VNA,
Yeah.
took me 30 minutes.
That's a long time.
Like that
That's a long
distance
time.
takes me 5 minutes.
That distance is walkable.
I'm like,
I walked the distance.
that's crazy, man.
Took you 30 minutes.
Took me 30 minutes.
Yeah, no, it's been hectic. Yesterday I went to the waterfront. It was a mess, man. it was a mess, and there were so many GP number plates. No hate against GP number plates, but yeah, y'all are many, hey.
Yeah.
Yeah. So that's Sun International,
Okay.
and then number 3 is Naspers. Naspers is number 3. It's been making a good
Very
comeback.
resilient, eh?
Very, very resilient. I think the management shakeup has been exactly what has been the right type of medicine, to be quite honest. And now, one of the things I'm going to touch on is the share price discount to net asset value.
Okay.
I'm going to touch on that.
And that's one of the things that we touched on the first or second episode.
We touched on that, but like, I have a new shift. I have a shift in thinking.
Okay.
As a result of a meeting I attended this past week.
Okay.
And then number 2, we have ShopRite. Again, guys, if you've been following this podcast, you are now a retail analyst because my guy here, he's been on it. And then number 1, we have Capitec. Capitec, there has been something that's been happening with Capitec with plus 24.33%. I think let me actually start off with Capitec. And the latest news that has come out of Capitec before I get into the whole consolidation discount to net asset value. With Capitec, I think it was on Wednesday, they announced a termination agreement between them and Sanlam. And it had to do with their funeral plan. So Capitec, one of the solutions that they've brought forth to the market, it's not only a banking solution, but it's also been an insurance solution.
So they're trying to be a one-stop shop for financial services products.
Exactly.
Yeah, there's a lot of banks do that.
Yeah.
I mean, ABSA, I know ABSA Life, they've got a life insurance on that side.
Yes.
Even Standard Bank does have some insurance element into
Were
it.
they underwriting their own insurance products?
I think ABSA does have an
Yes.
insurance license.
Yes.
I don't know about the other banks. But I mean, even if you can see even the move from Discovery as well,
Yeah.
right? It started as an insurance company,
Yeah.
but they've got a banking license now. They've got a Discovery Bank. So they want to be a one-stop shop for financial services products, right?
So it's quite interesting.
And it's not even just the banks and the insurance companies.
Yeah.
If you look at the retailers as well,
Yeah.
like ShopRite launched the money market bank of some sort, where you don't pay banking fees to actually transact on it. I swear ShopRite didn't pay me to do.
Wait. So like when you're saying no transaction fees, like what is it? Can you just go into
It's
the
like a
actual product?
wallet.
It's like a wallet.
Yeah, it's like a wallet, but you don't pay any transactional fees on it.
Yeah.
You do keep money on that wallet, but you don't pay any.
Does it earn interest?
No, not as far as I know.
Oh.
Yeah.
Okay, cool.
But I think I think it's probably just their entry into the market.
Yes.
In terms of the financial services, but the money market business, the way they've been doing it, it's been fantastic, man. They've managed it very well. You know,
creepers.
like it's
the lines are blurring, mate. Like between like these businesses, and like you can't really compartmentalize them.
Yeah.
As to like this is a retail company because this is a retail company that's doing a lot of financial services.
Yeah, it's either you innovate or you get out, mate.
It's true.
Because I mean, if you don't diversify your revenue streams, then you're definitely gonna be out. If there's a whole, because I mean, retailers is literally you buy, you put it on yourself, on your shelf, and then because you've got a ShopRite brand, then you put a margin onto that.
Yeah.
You're not improving the product. It's a product from Tiger's brand. It's the same thing, right? That you're gonna find at Pick and Pay, Woolies, whatever, right? But because you've got a brand, you price it based off of your brand.
I agree.
Right? And it so happens that if there's a push on the supply side, it could put pressure on your side, right? And squeeze the margin. But then if you've got a diversified range of products, say for instance, you see a lot of retailers going into private labels.
Yeah.
A lot of retailers is going to
no name.
Exactly. That's the private labels, right?
Yeah.
And they're also doing financial services. They're diversifying into clothing now.
Yeah.
I mean, ShopRite has Unique, which I've bought some clothes as well. Not this, but I've bought some clothes as well from Unique. And the quality was actually quite good. Much better than Pick and Pay quality.
I'm not sure. But anyway, continue.
Yeah, you should check Unique.
Yeah.
It's actually much better. Even the prices, I mean, a little bit steeper than Pick and Pay clothing.
Okay.
Because of the quality, I think. And then Pick and Pay as well, branch into Pick and Pay clothing. You've got Pepco as well. It's got like a range of products as well. Like Woolies as well. I mean, it's a 50%, largely 50% clothing and 40% food. And then the other one is beauty and stuff.
It's true.
So you can imagine that these companies are kind of like diversifying and not just being in one-stop shop.
I think,
but that was just an interruption.
No.
I think continue your thoughts.
No. Like I think just to latch on what you're saying, I appreciate history. I consider myself a student of history, and if I look at the South African business history, pre-94, you've had a lot of conglomerates. In fact, I think this is not just South African phenomenon; it was a worldwide phenomenon.
Yeah.
You had your likes of Anglos, which were not just involved in mining, but they were involved in almost everything. You've had your South African breweries. You had Rembrandt before it was Remgro. And these businesses, and Bollerworld, and that's another one, where you had these businesses that had interest in almost everything. Everything. And after 94, they went on a consolidation journey.
And unbundling as well and stuff.
Lots and lots of that happening. But now we're kind of seeing that happen again, but not by purchasing businesses and listing those businesses, but by diversifying their product range and diversifying their income streams. But in essence, they're actually doing the same thing.
Yeah.
They are expanding again, but just doing it through their product offering, which I think is an interesting phenomenon. We're going to see more of it. You're quite right. Businesses for a long time can't stay inward looking.
Yeah.
They have to look outwards, and the lines are becoming so blurred as to the main offering of certain businesses. Like soon, with financial services, you're gonna have to call them financial services. You're not gonna be calling them a bank anymore, because like it's a bank that can actually
do all these other
do
things.
all these things.
But you can see even the telcos as well. They're not just telcos, right? Like Vodacom has VodaPay now. Like VodaPay,
M-Pesa as well.
Like
when they invested in M-Pesa,
they've got M-Pesa. They tried in South Africa, it didn't work.
It didn't work, it didn't work.
But in Kenya is a thing. Like if you don't have M-Pesa, when I was in Kenya, people were just like, how do you do with your life?
How do you do it?
How do you live your life without M-Pesa? I'm like,
and I wonder how big. Like if you look at the composition of the business structure, how big is fintech to Vodacom?
It's quite big in telco. In what's this? MTN.
In MTN.
MTN, yeah. They've got a very big tech business that they actually want to unbundle and actually operate as a separate business and also ultimately listed.
Interesting.
Yeah, because it's quite big.
Jeez, no, this is interesting. It'll be interesting to see how people's investment portfolio actually has to rebalance because of all of these happenings. That we are seeing a shift of how companies present themselves to the market. So whether they are going to stay in-house and have multiple businesses but still under one business, or unbundle and
operate the business
and operate businesses. And
I mean, look at what Investec did. By the way, shout out to Investec. They actually
they did. Shout out Investec.
They actually liked our post and commented on our post and stuff. Yeah,
they did,
because we talked about Now Clarity by Investec.
Yes, they did. Shout out, guys.
Yeah. So look at what Investec did with 91.
Yeah.
That business became too big to actually be in Investec. So they unbundled it. 91 is now separate business, separately managed, etc., etc. So but they're still now. I think they're trying to get back into the asset management game again. To grow it again, but
all the best.
Like it's you can grow at one part of the business too big that you feel it needs a separate board. Right. It needs a separate division. It needs a separate board team that actually manages that, and then we can just hold a stake, and then they can report the financials and consolidate into the holding company per se. But a company can grow a one division that started internally without actually buying it and become that's probably what I think is going to happen with Discovery Bank, right? I think that business may have a chance of actually growing to be at the size of Time Bank and the likes, to a point where it would need a separate management that is actually focusing on growing the bank.
Yeah, that's fine.
I mean, that's what happened.
I thought you're going down a direction of it's going to become its own bank, kind of like how what 91 is to Investec.
Yeah. I mean, it may, because what I'm saying is that sometimes the business is just too big for the management to actually manage both, because they've got a very big insurance business.
No, I understand.
Right? And you need bankers to actually manage the bank.
No, I get it. I get what you're saying.
So you need a separate team to actually manage that and grow the business. That's what Old Mutual did as well with Nedbank.
It's true.
It's true. So it's things like this where you see that,
that's what PSG did with Capitec. No, I totally get it. And I think, just sorry to cut you off, just to tie a bow on that whole Capitec thing, is so they terminated the agreement. The insurance product that you were seeing on Capitec was underwritten by Sanlam.
Yeah.
But now, because Capitec has got an insurance license.
Oh, wonderful.
It's called Capitec Life.
Yeah, wonderful.
And so I think the termination date is the 31st.
The insurance business is becoming more competitive, eh?
It's very, very competitive. This is good for us. It's good for
it's good for competition. Is good for us consumers.
It's good. It's very, very good. Yeah. So the termination date for that, I think, it's the 31st of August 2024.
Yeah.
And so as part of the cost, Capitec is going to have to pay Sanlam about 1.9 billion rand. But the relationship has
Is
been
that
good.
like a breakaway fee
Yeah.
and stuff? Okay.
Yeah. But it's been fantastic. Sanlam has benefited. They use Capitec as basically like a conduit to get into the mass
Yeah, because
market.
they've got a customers. They've got a huge database, right, of
Yes.
customers
Yes.
and all of that.
So yeah, it was mutually exclusive. It was widely successful for both parties involved. I think
how did the market react to the news of Capitec and
so with
Sanlam split?
Capitec, it did it slumped a little, but nothing profound. And then with Sanlam, it edged a bit higher.
Okay.
Yeah, I mean, like, listen, this was a temporary relationship of which both parties benefited, and as a result, it has now come to an end. So that's Capitec.
Yeah, and then Remgro, how was your board meeting?
That was epic, and I think that
yeah,
was
the
epic.
shareholders that actually attend board meetings. I actually don't, but this man makes it a mission to be a present shareholder. You know, like I'm impressed, man. Like
it was epic.
I'm impressed.
It was very, very nice, and I think, sorry to get slightly political, I get upset whenever I go to some of these meetings, and I always find myself being the only black person there, because in these meetings, these are economy moving, shaping meetings.
Yeah.
And if we're speaking about economic emancipation, we can't even begin to start without being in that room. Okay? We need to be in that room, and seeing all these people go on about these big political terms on social media and not putting their money where their mouth is, to find themselves in that room where the decisions are made, it's a bit disappointing.
Yeah.
So I find myself being there, and I really look at myself as I'm not just there for myself, but I'm there for my people. That's slightly just the political side. But on the shareholding side, I do own Remgo shares, not part of our portfolio.
Yeah.
And like I said, there was a shift. The big issue with Remgo amongst shareholders, quite similar to Naspers, of which we do have that in our portfolio, is it's the consolidation discount to net asset value.
Yeah.
If you want to know a little bit about that, I think it was episode 3 or something like that. Yeah. And I had a mind shift.
Yeah.
And primarily that mind shift came in the form of, you need to look at the two forms, in that the first one is the share price, and the second one it's the net asset value of the business. These two are driven fundamentally by two different things. The share price is driven by market dynamics, demand and supply.
Yeah.
And then the second one, the net asset value, is driven by capital sourcing, capital allocation, and capital management. In essence, management competence will drive that. If management has been good in the way that they've sourced capital, healthy capital structure mix, that's a good balance sheet. If management has been good in allocating this capital, so that's the investment decision, that's a good management team. And obviously managing the entire portfolio in the form of your business model, that's what drives that. And if you're going to have a big business that sells other businesses as their business model, you're going to have mispricing, bro.
Yeah.
You really are going to have mispricing, and the chairperson, Mr. Rupert, actually he dealt with it very, very nicely.
Yeah.
In that he's looking at the coronations and he's saying that, no, it's you who controls the share price. We control our business, and as a result, there will be a discount, or rather a mispricing between the two.
Yeah.
What's important, and I think this is the conclusion of it before I open it to you. What's important for shareholders is that look at the controllables as to what management can actually control.
Yeah.
And that is the net asset value of these businesses. If the net asset value of these businesses is going up, you've got good management. The share price follows that. Now, it could take time. There could be other structural potholes that actually delay that closing of that gap. But what you're looking for good business that leads to good earnings, that leads to cash flow, that leads to good net asset value. And that was a mind shift for me because I obsessed too much on the share price.
Yeah.
Share price, share price, share price, share price, share
Yeah.
price. Yeah.
No, look, fair enough. But I mean, at the end of the day, if it's a listed company,
Yeah.
you get exposed to the share price, not necessarily the NAV, right? You do expose to the NAV, but I mean, when you're buying and selling, you're not gonna sell at the NAV. You're gonna sell at the share price.
I agree with you, but
That you at least need some level of conversion between net asset value and the share price.
I agree with you, but I think break it down a bit further.
Yeah. So what I'm saying is, you got a good business that is making good cash flow.
Yes.
Right?
Yes. Like Remgro.
Like Rankbro. It's making good cash flow. They own Mediclinic. They own
RCL Foods.
all these different things,
Yeah,
right?
yeah.
Cool. From all those different companies that they own,
Yeah.
then they get a net asset value that is 100, right? But then your share price is at 60.
Yeah.
Right?
Yeah. So there's
That's the discount.
There's a 40 rand
There's a
discount.
40 rand discount.
Yeah.
Right? Cool. You get in when you buy a share of Remgro, you're buying it at 60. Right? Cool. And then you find that the net asset value grows into like 200 bucks.
Yeah.
And then your share price only goes to like 80 or 100.
Rand. Yes.
You're not getting that exposure. You're not getting the share price is not converging to the net asset value enough for you to actually gain from that.
I hear you, mate.
Yeah.
So I think what I was going, I think the point I was driving at is that discount is an important consideration. You're 100% right.
Yeah.
It should play a role in your analysis.
Yeah.
It should not be the determining factor.
Okay.
That's the point I'm trying to make in that obsession, and it's true. I mean, like it's a share price. It's a share price.
Yeah.
It's true. We're supposed to make a meal out of it.
Yeah.
However, I think in any analysis that hinges on the share price discount, then I think you're kind of missing it, because I think in essence what you're trying to do is you're not investing in a share price. You're investing in a business. A business has earnings, and a business needs to generate cash flow. If that is happening, you are investing in a good business, unless if you are maybe in it for the short term. Then
if you're trading.
If you're trading, and we in fact episode 2 was based on that thing.
Yeah, we spoke a lot about
We
this.
spoke a lot about this, but I mean, like, if you get a business with generating good earnings and generating steady cash flow, which can lead to a steady dividend, I think that's what you want as an investor, is it not?
Yeah. No, fair enough. Like, we did talk about the fact that when you're investing in a business, it is not, this is not a triple M scam where, this is a fundamental that is linked to an actual business that is functioning with people that manage it.
Exactly.
And like we did say that when you put in money into a share, you're giving somebody else to actually manage that money for you. So the management that are in charge of Remgro, the management that are in charge of Shoprite, they drive the success of your money. Whether or you lose or you gain it, that's driven by the actions that are made by those people that are in management of that. So we did say that get to know the business. Like I said, I think in one of the episodes that I said, I will never invest in something that I don't understand. Because I don't know the risk if I don't understand the business.
You're right.
Right? Because if you don't know the risk, then you don't know what could go wrong. And something could go wrong, you wouldn't even know. And then you just look at your easy equities, and then it's like red, or there's like, I don't know, another Steinhoff element that actually happened.
I also just want to add that I think I would be nervous as a shareholder if the business that I've invested in, if that board and that management team is always speaking about the share price, then I'll get nervous.
Yeah. No, I agree. They have very little influence on the share price.
No, like listen, your job is to source the capital very responsibly and optimally, allocate it as best as you can, and manage it as best as you can. If management is doing that and the board is holding them account with that mandate, then I think you're dealing with a very, very good business. And I think my last thing, and I mentioned it with, was it 2 weeks? The 2 episodes ago, in that the share price is very, very important. But
Yeah.
I think with an investment holding company, there are other ways also to realize value in that there's a lot of unbundling, there's a lot of corporate actions.
Yeah.
For example, with Remgro last year with Gridron,
Yeah.
Gridron Shipping, and Gridron as well.
Mm.
So there you had access to free shares basically. It was quite similar with Mediclinic as well.
Yeah.
So like in that you can from one share you now have a few shares in your portfolio without compromising too much on your share price as well.
Yeah.
But that was just the mind shift, and just to conclude, to tie it, is that the share price is important. Price is important. It's always going to be important.
Yeah.
But if your analysis is going to be based on that, then you are trading.
Yeah.
And not necessarily investing for the long term.
Okay. Fair enough.
Yeah.
All right. I'm gonna talk about the tobacco industry then. On what's been happening and some of the elements as well that look, we got our hands banned.
Yeah, we did.
But I think it's not something that I've not spoken about. I did speak about that there's a lot of new environmental friendly products that is happening in the industry.
Yeah.
The vaping stuff and all of that, the flavored
I
cigarettes.
spoke about it with Matt.
Yeah.
Before you arrived. Yeah.
So BED came out to say that one of their brands, right, that uses the traditional combustibles.
Yeah.
They impairing those brands, which when you own a brand, you've got an intangible on that brand.
Correct.
In accounting terms, which accountants would appreciate this, is some of those brands have indefinite life, right?
Correct.
Some of the intangible assets have indefinite life.
Yeah.
But then BED came out to say they have reviewed their accounting estimates and believe that some of these brands have a definite or defined life.
30 years to be particular for BED.
So you're like, okay, this is not unexpected. This is not totally unexpected because I knew that there's a shift in the market, right? Yeah. In terms of having those different products. So I think it also an indicator that they're also probably targeting towards having environmental 100% of product system, probably towards environmental friendly products. The new types of products.
You're spinning it so nicely. You should be the spokesperson. Listen. When I'm gonna jump on that and I'm gonna tell you as it is because you're spinning it, but I guess it's fine.
Look, it's because the thing about it is it's not totally unexpected from me. To be honest, I knew that the whole industry, Philip Morris, British American Tobacco, right? The share prices are going to be affected in the short term. But I knew that at least internally, there's already plans in terms of moving to that. I think I did speak about the percentage of revenue as well. I think I said 20% to 30% of the revenue is coming from the new products.
Yeah. So
right?
so with BAT, in the announcement that they made when they announced the change in accounting estimates, they are targeting 50% of non-combustibles to make up their revenue.
By when? You said probably
30 years. That's what they said. No. 30 years is the new life. Is the useful life.
Of the brands.
Is a useful life. Yeah.
So that's probably a very short term target.
Yeah.
That in whatever, probably 5 years, they're probably gonna have 50% of revenue coming from non-combustible.
But I think saying it as it is, number one, let's mention it. The share price dropped by 10%.
Yes, I was gonna get to that.
Yeah, no,
I'm not shying away from the negative side of it. I'm not doing a PR
cool.
bet.
Okay, cool. Continue.
I'm not doing. But I did say that we got our hands banned, isn't it?
We did, but you're shying away from the numbers. The numbers.
Look, so the impairment figure was around 31 billion, 31.5 billion USD.
Yeah.
So that in fact.
Say that again. Right. Say that again. Say that again. It's 31
USD.
Billion.
Yeah, billion.
That's a large number.
But also, it's a large amount of intangibles that we're talking about. I mean, look at BET's history, man. And look at a lot of what's this thing? Not a patent. If it's not a patent, is what?
Trademark.
Yeah, look at the trademarks. Look at the patent. Look at all those things that they actually own over some of the big brands that they have.
No, mate.
Right?
Like, listen.
So the value of those things were quite big. So even the impairment that we're talking about, we're going to be talking about big numbers.
Yeah.
Right? And that number as well, it's not cash.
No, mate, I definitely hear you.
I am not defending the business, by the way. I'm not defending the business.
I think we should say it as it is, in that this business of combustibles is dying.
Yes.
So you haven't mentioned that.
Well, I did say that the industry is shifting.
You see, that's what, you see, that's what I'm saying. This business is dying, and it's basically been for a long time.
Yeah.
People thought that it's gonna go on forever, hence the indefinite useful life.
Yeah.
But now they're saying that they've given it a finite.
Yeah.
30 years, but
Yeah,
obviously it's probably going to be more than 30 years, right?
Yeah, it's probably going to be more than 30 years.
It's going to be more than 30 years, but they're saying that, listen, now this thing here, we are going to amortize it over 30 years. And like, if going from forever to 30, like obviously then you're going to get a big impairment. I mean,
Yes,
like if you were to convert that into rands, you're close to 600 billion rand.
Yeah.
And then obviously the share price.
That's a profit hit of 600 billion rand.
So yeah, it's an impairment. You see, and so like that affects your P&L.
Yeah.
Right. So I think let us be forthright and let us be straightforward when it comes to this, and not talk about industry.
I mean, look, that's the whole thing about us being here together, right?
Yes.
Like, if you feel like I'm not saying things as they are, you call me out, right? But look, it's because maybe I'm positive towards this news than negative. Yeah. Because like I said, this is not completely unexpected.
No, it's true.
It's not like the business is going to completely collapse.
Yeah.
It's not.
It's not.
And they've prepared for this. And also, the key element here is that regulators are also still figuring out how to regulate the shift in the industry as well.
Sure.
So it's not going to be like,
No, I agree. You know? I agree.
Maybe that's why I have a positive view in this news. And for, like I said, for me, it was not totally unexpected.
Yeah.
You know, like if you go back to that thing when I chose BET, when we're investing in BET.
Yeah, you did mention.
I did mention that there's quite a big shift.
Combustibles, non-combustibles. Yeah.
So you can imagine. But yeah, look, they got 31 billion right down into their profits.
Yeah.
And
it was
share price was down around on average 10%.
10%. Yeah.
So
it's also, I think it's also worth mentioning that a bulk of the impairment damage was in the US business.
Yes.
So the brands such as Camel.
Yeah.
The US. Yeah.
Yeah. So it's very interesting.
It's an interesting story, mate. Another story. It was the RCL which caught my eyes. It was the RCL Foods.
Yeah.
So just to give you a bit of background,
how much stake does Remgro have on RCL?
RCL is a subsidiary, so it's more than 50%. I think.
But it's 80, listed separately.
Yeah, it's listed separately.
Yeah.
One of the things that are costing the discount.
Yeah.
But no, I think it's roughly about 80%. But I speak under heavy impression.
They own 80%.
Roughly.
Interesting.
Roughly about 80%.
I don't know. Remgro
Yeah. No, I remember. I saw this number. I saw it on Monday, man. Sorry. So like, please, if my number's not correct.
Yeah, but maybe we can just put it on
We'll put it on there.
Yeah.
Yeah. So it's a subsidiary of Remgro and RCL Foods. For those that don't know, they own Nola. They own Salati sugar, of which that's where the story is actually. It's gonna boil down to Salati sugar. They also own
reminds me of that company, the sugar company, the one that
Tongat.
was on Tongat. Yes,
the story ties with Tongat.
Okay.
Of RCL Foods. So with RCL Foods, that's them. They basically everyday goods that are
basic
foods that South Africans interact with on a daily basis. RCL Foods is the manufacturer of those different products and those different brands. So with RCL Foods, because of Salati sugar, they have regulatory obligations. You saw with the increase of the sugar tax recently that affected RCL Foods quite profoundly. And another development which affected RCL Foods, of which the story goes into, is Tonga Hewlett. Tonga Hewlett, they also make sugar. Now, what the interesting bit is that there's the regulatory body called the South African Sugar Association, SASA.
Yeah.
And with them, they by law are obligated to collect levies from sugar producers from all over the country. Now, they are mandated by law to actually,
So they're a version of SARS.
in a way, for the sugar industry. Although SARS also collects
That's
tax
a lot
as
of
well.
money.
It's a lot, but they are mandated by law to even collect a certain amount based on percentages.
Yeah.
And if there is a participant in that arena that is not paying the levies, the other participants have to pick up the slack.
Is that so?
It's crazy.
Interesting.
They have to pick up the slack. So now Tonga Hewlett have gone into business rescue. And because Tonga Hewlett has gone into business rescue, other players such as RCL Food has to pick up the tab for the special levy. And RCL Foods has incurred a cost of 234 million rand pre-tax, all because of Tonga Hewlett. Imagine you're not even connected with this player, but because they are dropping the ball, you are gonna have to pay, and that had a rough impact on RCL's trading profit this year.
Interesting.
And as a result, this past week they launched an urgent application to the court in KZN. I think, yeah, that's where Tonga Hewlett is.
For what?
Basically, the business rescue practitioners have presented a plan of paying back the creditors, which excludes RCL Foods, as well as the South African Association, South African Sugar Association. So the urgent application was basically to kill that that presentation of paying it back.
So but they want the
to at least include
to be included.
Yeah, okay. Because like
as part of the creditors.
That's part of the creditors because like they picked up the tab.
Yeah, but look, it's I'm not a lawyer, but I think it's one of the rank of tax and all of those things. I don't think they rank high when it comes to like debt restructuring and all of those things. And so it will be interesting on what actually happens in the court.
So mate, the share price took it. Like the reason why we're speaking about it now is that if there's an RCL Food shareholder here, or Remgo shareholder. I know Zama's a Remgo shareholder. No? Yeah.
Oh, shout out to Zama.
Yes. Yeah, she's a Remgo shareholder. This affects her as well.
Yeah.
But I think there's something fundamentally not fair that if you drop the ball, I pick up your tab, and then when it's time to pay back your debts, I'm not part of the recipients of that. Okay. I think fundamentally that's not quite correct. What's your view on that?
Look, I think it's an interesting element. It sounds unfair, but I haven't read the law to understand.
No, it's true. Like, lawyers, please, like, if you know anything about this, please reach out to us. But I just think from a high level, there's something not right.
Look, it doesn't make sense. But I mean, I think if it's a matter of they collecting levies based off of an overall production, and then it gets split across the different players, maybe that makes sense. But like, it doesn't make sense. It should be a levy specific to you and not specific to the industry, if that's the case, if that's how it's calculated, to say there was 1,000 production in the sugar industry, we want 10% of that.
No,
but that has to be shared across, so I don't know how that works, but
that's RCL Foods.
Interesting.
We touched on it. I spoke to Mr. Yanni Durant about it, and it's giving him a headache. But that's RCL Foods.
Nah, it makes sense. But anyway, I think one of the elements that I wanted us to do is just to thank our investors that have been supporting us throughout. I mean, it's been quite a great journey
It's been
with them.
fantastic.
It's been fantastic. We've been getting a lot of comments. We go on our Instagram live and we do share some of the lights in terms of their current affairs, like interest rates, one of the elements that we've dealt with quite extensively.
Yeah.
So I don't know, like I want you to give a shout out to 5 investors that you know that support us. One of them you've already mentioned is Zama.
Zama,
Um,
Faith. Yeah, Zama, Faith. Who else? Katu.
yeah.
Um, who else, mate? Who else?
I don't. These are yours, not mine.
Who else, mate?
These are yours, not mine.
Oh, geez, I'm forgetting some of them, but like we've been receiving like.
There's been a lot of them that actually even comment on our YouTube ones. I know there's quite a guy.
Can we give them a shout out?
Yeah, there's quite a guy that actually comments on our YouTube. I'll tell you now. One of the guy is Lishonolo Nolo.
Yeah.
He does that as a lot. So Dina Mbui.
Oh, Sudana. Shout out Sudana. Sudana, yes.
Is that yeah.
Sudana, yeah.
Wanani as well.
Wanani, shout out.
The people that actually just like as well.
Yeah.
Quite commonly.
Yeah, but there's a few, but there's a few who like always like commenting.
Yeah.
Yeah. So the 3 that I mentioned, Katu, Faith, and Zama, they've been consistent.
Quite active.
Very, very active.
Next year we should have a because this is our year-end episode.
Final episode.
Next year we should have like a gift that we're gonna give to one of the investors.
Yeah.
But also we're gonna launch the portfolio run competition next year. And then one of the best investors that is gonna make better returns, we call it alpha, that is gonna create alpha that is bigger than everyone else, excluding us.
Can you please explain the term alpha property, please?
Yeah.
Can you get into it? It's a very important concept in the context of portfolio management.
Yeah, so alpha is it's the money that you create over and above your cost of capital.
Yeah.
That is the alpha.
Yeah.
Right? So if it costs you this much for the capital and then you create your return that much and then whatever that is above, that's basically profit.
It's basically profit.
It's basically profit.
I would even go as far as say as well, within a portfolio management context, because we have benchmarks.
Yeah.
The amount that you actually beat the benchmark as well.
Yeah, if we had to simplify that,
yeah, that's considered your alpha.
But it's much technical than that. But
it's way more.
If we had to simplify it, then we could say like the profit that you're making over and above your hurdle rate.
Yes, that's it.
Which makes sense. But look, I just wanted to say shout out to all the people. We're sitting on 279. I'd like to end the year with 300 investors that are following us.
It'll be epic.
And then I think next year we should do a monthly run of giving away some goodies with some of the guys as well, like easy equities, vouchers and stuff like that.
Yeah.
It would be good.
And I think it's gonna be nice because we've caught the attention of Investec and now Clarity as well.
Yeah.
For them to come on board in some sort of a sponsorship capacity.
Yeah.
It'll be very, very nice. So that we can grow the podcast.
Yeah. No, definitely. And what are some of the opportunities that are coming up, mate?
Like investment wise?
Yeah.
I'm keen to see this whole December period. How that plays out. Black Friday disappointed a little bit.
Yeah.
As far as
people have become smarter around Black Friday,
which is good, depending on what hat you're wearing on.
Yeah.
If you're wearing a shareholder hat and you have positions in retail, it's not that great.
Yeah, it is not.
But then if you yourself, your personal financial management, you must make the best decision, and we encourage that here in the Investment Candle podcast. But like, yeah, so Black Friday was not. It kind of disappointed. There was a bit of a date mismatch of the 24th falling on the Friday instead of the 25th. That was some of the contributing factors, but also this holiday period, the summertime. I'm keen to see the effects that will have on some of the positions that we've taken up in travel and leisure,
Yeah.
as well as continuing seeing the developments up there in the Middle East.
Yeah.
It hasn't been easy.
Yeah, it
But
hasn't. But
yeah.
I read on the news that they've started the peace negotiations.
There's been there's been forced ceasefires, temporary ceasefires, but those are really it's like a bandage.
Okay.
I, if I was to be honest with you, there has to be some sort of a fundamental political shift in the two, and my own personal opinion, some level of compromise in what the world sees as a two-state solution. This is just my own opinion. Obviously, what I do as far as my investments are concerned, I'll keep that to myself. But yeah, that's just, I think, in order to have something of a profounding, lasting ceasefire, pseudo peace, there has to be some sort of a political agreement as to what a living together solution looks like.
Yeah.
My own opinion.
Okay.
Yeah.
That makes sense. No, interesting. I think it would be interesting to see how leisure does and how retail does in December sales.
Yeah.
I think we've already seen them all decorated with Christmas things, and
we've seen that.
you know, like we've just talking about the level of influx of tourists in Cape Town. I mean, that also brings in some of the money from outside.
Yeah.
With Europeans coming with dollars and being the big money spenders and all those things. So we should see an uptick in sales, and hopefully, because usually retailers actually do come out with their December sales and tell us like how the December sales were like. So it will be interesting to see that. But yeah, none other than...
One more question. So next year we're going to an election. There'll be lots and lots of political noise.
Lots.
It's already started with the whole rand manipulation
thing. Yeah.
Basically, just quick economic forecast for 2024. South African economy.
Yeah, in the political landscape,
Yeah.
I think we're most likely gonna be governed by a coalition government.
At
That's my point.
At a national level.
Yeah, that's my... I don't think ANC is gonna... If they get 50 plus, that will be a very scrap. It will be like 50 plus 0.1 or 0.01 or something.
Interesting. Okay.
I don't think ANC is going to get majority.
Okay.
Well, I don't think they'll get majority, like 50 plus. So we're most likely going to be governed by a coalition government, which is going to be a very interesting aspect in South Africa. But I think it might be a step in the right directions in terms of keeping accountability in the government arena.
Yeah.
Because we've seen a lot of complacency when it comes to corruption, when it comes to running down the SOEs.
No, we've talked about it.
Talked about that quite a lot.
Yeah.
So I think next year it's gonna be a chaotic year.
I think it is.
But it's gonna be a defining year, right? A defining year in terms of where we're headed, good or bad.
Yeah.
So we could mean that next year, bruh, if I get an opportunity,
no, okay, wow.
I'm kidding.
Wow, you went there.
Kidding.
Yeah,
I'm
no.
kidding. But yeah, look, it's gonna be a very chaotic year, and it's gonna be a very defining year of change in South Africa next year. Because I think one of the good things that I've seen is that the youth of South Africa have actually taken a stand to go and register for voting. I really hope that the commitment of actually going to vote and not just register, it's actually going to come out.
Yeah.
Because one of the problems that we're having is that we've got a lot of young people that are tired of the government, but they're not doing anything about it when it comes to going to the station and actually vote. I know all the political parties, in my view, it's really the devil you know and the devil you don't know and all those things, because I don't see anyone that really presents what is better and than what we are already saying. right? Everyone has a scandal in the closet. Julius Malema, one of them. Um, Herman Mashaba, I don't trust that guy. Like, there's a whole lot of things, right? And that these people believe in and don't believe in that.
Yeah.
It's what people want. But the one thing that we all as a nation want is at least a stable power.
Yeah.
That's the one thing that we want. And also, we do need the train system to be back and running.
Yes.
That's why transportation is so high for even families to take a big portion of the income that comes into the family, because we are so reliant on road. And because of that, we also have a lot of accidents because there's so many people that are moving around in the road. Some of them are too tired. If you're tired, you would take a train, long distance train. You'll be able to rest on the train, put your car on the train and travel with it, right? But because it's literally impossible because there are no trains to do that, then it becomes a mission, right? Yeah. And also, one of the elements that I would want the South African government to reconsider is that our country trading hours end at 10, right? I mean, your last flight is going to come at 10. So that becomes a problem, because if you've got a curfew on the economy, it means that only people can like literally trade along those hours.
This is interesting.
But
wait, are you saying
production can actually go over and above that? Yeah,
so it's at 10.
I mean, look, Gautrain, what time does they close? At 9. Why is Gautrain closing at 9? It doesn't make sense.
Doesn't make sense
because it's one of the big things that we have in South Africa.
It does not make sense. I didn't know. Wait, like so
your flight of domestic flights, all of them, the latest flight that you can get is like, I think 8:45.
Why?
Which means that, and the longest distance you can get is the distance between Cape Town and Joburg, right? Which is 2 hours, which means your last flight is going to land either in Cape Town or Joburg at 10.
Why?
I don't know. I don't know. It's a messed up thing, right?
Why?
Because
it's like we're putting handbrake on economic activity.
Exactly.
Why?
I don't know. So it's one of the things that when you look at, I mean, yes, there's an argument of crime, right? That like the more people you have out at this time and all of those things, then there's gonna be a whole lot of crime activities that is increased. But if you look if you look at one of the some of the successful economies out there, is that they have a 24-hour
it's 24 hours
economy.
Bro, like
we don't.
What you're saying is absolutely blowing my I lost my train of thought because I was gonna also respond. But this whole thing of us putting time on economic activity, it needs to end.
Yeah.
No, that must end.
Yeah, look, it's unfortunately like that the economy of South Africa has a curfew.
It's a curfew, bro.
Which is quite sad. I mean, they don't. It's an implicit curfew because
I don't get it.
All the key economic activities kind of close at 10, basically.
I don't understand why.
Yeah, I also don't understand.
Like there was this other. I remember my dad used to tell me about it. I think it was a Pick and Pay. It was a ShopRite. I forget the one in Hillbrow. It used to go on. Like he used to get tomorrow's newspaper today.
Yeah.
That is a normal occurrence in any city, in any big city where there's movement of people.
Yeah.
But if we're going to be closing shops at 10 o'clock, I'm so sorry. I'm so
even
sorry.
Even fast food restaurants, they used to be 24 hours, no longer 24 hours and the likes. But anyway.
Yeah. Anyway, that's
we are out of here. We are I'm going to Limpopo, Nico is going to Gauteng, and then we'll head back here in Cape Town in Jan, and please be safe and enjoy your holidays. I'm going to take off my glasses now so that you can see me.
You held the thing for long, bro.
I held it, man. Like I was just talking through art, and like I said, it's therapy for me. So I couldn't feel anything else.
Very
but yeah, thank you, investors, and see you in 2024.
Sharp.